Hey, in this video I have consolidated and condensed everything you need to know about investing in Denmark. So that is taxes, rules, suggested asset allocation, types of index funds, and a lot more. So if you want to start investing in stocks in Denmark, this video will be your ultimate guide. I'll first walk you through all taxes, rules, and regulations, and after that I'll tell you the specific ways I invest myself. So timestamps for everything are down in the video description in case you just want to jump to any specific section. If you're new to the channel, I am Mario, I work for Maersk in Copenhagen, and I routinely invest between 50 to 60% of my take-home income every single month. I am a believer if people are living far below their means, they can enjoy a freedom that people that are busy upgrading their lifestyles can't really fathom. In my case, for instance, this freedom has meant that I have traveled to over 135 different countries. I now choose my jobs because I like them and not because of the pay. So I actually turned out offers for 50% more salary just because I didn't want to do a commute. Bosses look potentially boring, or the colleagues look boring, or I just didn't want to take a lot more work. And then the third thing is that having enough saved already now gives me the opportunity to say, okay, if I didn't want to work for the next 10 years, I could actually go ahead and do that with all the peace of mind that comes with that. And mine, I'm just a normal guy. Despite I somehow ended up being an investing YouTuber, I really spent just a tiny bit of my time on investing and the whole things around that. I just follow the maxim that if you invest high in absolute amounts, so it means that you invest a lot of kroner, a lot of euros, and you do it also in relative terms, meaning that you invest 50% of your income. I mean, you do not invest just a little, but you actually invest a lot of what you actually earn, and do though consistently over the long term, things will be good to take care of themselves. Okay, with that said, just a few quick disclaimers. The first one is that my strategy is a lazy strategy. So I work for my investments to be as automatic, hassle-free, and frictionless as possible. So I'll only look for the long term. Almost all of my investments are auto-allocated automatically. I basically set it and forget it every single month, and then it's just done. I also buy and almost never sell. Two is that I have a Denmark-specific strategy. So you need to be aware of that Denmark has a very high level of capital gains taxation, and also a lot of complicated rules, which we'll go through in this video on how each instrument is specifically taxed and when. A lot of these things mean that a lot of things that are good investments in Denmark might not be a good investment somewhere else, and vice versa. Third thing, and very key as well, is that I'm obviously not a financial advisor. This is for informational and entertainment purposes only. If you're gonna be investing, you're gonna be putting your capital at risk. So this is serious things. Do your own homework before you start investing. Now we'll go through the Denmark specific taxation. So this can get pretty complicated, so please bear with me. We're just gonna get into the more fun part later. If you want to skip this, just link down again in the video description with timestamps. There are two taxation principles in Denmark when it comes to investing. I'll go through them first, and then I'll tell you for which specific funds each of these taxation principles applies. The first one is called aktie income. So that's principle one, and we can loosely translate as stock gain. And this tax is 27% for the first 57,200 krona that you realize in a specific year. And that can raise to 42% for everything that you realize on top of that. And there's a joke as well of raising this from 42 to 45, but yeah, that's still for now. Principle number two is what's called capital income, or loosely translated as well as capital gains. And this is more complicated, and it can be worse than this or the thing I just told you, the aktie incomes. And it goes between 37% and 42% plus church tax depending on your income level. So this can be pretty nasty. To make things a bit more complicated, there are two more principles, not on the taxation amount, but also, or meaning the taxation bracket percentage, but on the timing of the taxation. And these are the realization principet and the lager principet. The realization principet means the realized gains principle. And under this setup, like almost every other country in the world, you are taxed only when you buy or sell the stock, asset, or fund that you have bought. So for instance, let's say you buy an asset, which can be, for example, the stock of Tesla, you name it, right, for 100 krona, and then you sell next year for 150, you are going to be taxed on these 50 krona gains the moment you sell, not before. In Denmark, there's also the lager principet, which is the unrealized gains principle. And this is very nasty because in this setup, let's say, as I said before, that you buy something for 100, then it has raised, imagine in the same year, to 150, but you have not sold it, you have still kept it in your portfolio. This thing, because of this principle, you will still be taxed on this 50 krona gain again, even if you didn't sell. I have not seen other countries that have this principle, but in Denmark it's pervasive almost across a lot of different assets. So you need to keep this in mind as well. You'll be taxed in Denmark in many cases, even if you don't sell the asset. Sell a little bit of the thing that you don't want to sell just to pay the taxes. And I just told you, of course, that this is complicated, so if you want to learn more about this in depth and actually get a written version of this and more specific guides on how you approach this as well and so on, there's a link down in the video description to my free investing course, and also one other investing course where I go into even more depth, or we're talking about I think 3 hours of content. It's a lot of stuff. It's all down in the video description. Make sure you check that out. To put everything into perspective, right? So when you buy stocks, when you buy, for instance, the stock of a company like Apple, the stock stock, like a Danish company like Vestas, just when you buy the stocks of the companies, right, you always pay Actia incomes with the realización principal. So that's the default system that you're getting into. There's one exception that we're gonna get in a second, but like when you buy stocks, that's the way it works. When it comes to index funds and ETFs, which are the way that most people invest and the way I invest myself, or the way I recommend for most people to invest, taxation can get a lot more complicated. So it will depend on whether the fund pays dividends or not, and whether the fund is on a specific list from SCAT. This is not even including bonds into the mix, so it can get a lot more complicated. There's again link down in the video description where explaining this in a lot more detail. What you need to keep in mind, again, like depending on these variables, on whether the fund pays dividend or not, or is on the list, you might end up paying 37 to 42% or more unrealized, or you might end up paying 27 with realized gains only. So it will depend again on the type of fund that you're talking. For every single other asset I have not mentioned yet, so everything that is not a stock or an index fund, so we're talking about bond, gold, commodities, a lot of foreign ETFs, real estate investment trusts, things like that, it can get pretty complicated. Normally, what you say is that they are taxed as capital incomes, meaning this, nasty 37% plus capital rates, and lager, meaning that you are paying unrealized gains on this. So, and of course it will depend on multiple variables, right? But it can get pretty nasty. When it comes to cryptocurrencies, you are taxed in a completely different way. Your gains are taxed on top of your income taxes. So if you already pay the highest income tax bracket for your personal income, meaning for example for your salary, then you will get taxed on your gains on top of the income salary the moment you sell. But at least, you only get taxed when you sell the cryptocurrencies. And there's an exception to all this, and that's the Actias Pare Conto. I made a video where I explained the Actias Pare Conto here, but what you need to know about the Actias Pare Conto is that it's a saving account where you can deposit a little bit more than 100,000 Danish krona, and then all the gains that you have for the investments that you have in that specific account, and again, you can't port more than 100,000 krona ish, you'll only be taxed at 17%. That's a good deal comparing to what I have just told you, right? So, of course, there's always a catch, and for the Actias Pare Conto is that you will be taxed on unrealized gains. So again, stocks will go up, you'll need to pay each year a 17% tax on that up, even if you don't sell. It's still a better deal overall, and I still recommend for most people that the first thing you should do is maximize your Actias Pare Conto. The last point is that in Denmark also you might have a pension if you work in a company, or even if you work independently or you're a student, you want to have a pension as well. You can of course get a pension in Denmark, and the way it works in pensions in Denmark is that even the money that you put inside the pension, while it's inside the pension setup, you will not pay capital gains tax on the normal rates, but you will have to pay a 15% rate per year as well. And that's unrealized every single year. Again, I don't know if there are other countries that tax the pensions as well, but no, Denmark do that. They do. That's all the rules. It's a long video just on rules, but you really need to understand that. Basically, as I said before, like the strategy you pick to invest will reflect this regulatory landscape we have here. Otherwise, you will end up losing money, or you will end up leaving money on the table. With that said, I invest now on 3 main buckets. So this is what I do myself with my own money. First, and the biggest bucket is index funds. As I do at the moment, 85% of my monthly investments, and I invest every single month, as I said, is on index funds. And indexes are the best passive strategies. I now quote Investopedia, where they say like an index fund is a portfolio of stocks or bonds designed to mimic the composition and performance of a financial market index. Indexes, just to make it simple, are if you would buy 500 companies in just one shot, proven time and again that indexes beat the actively managed funds over the medium and long term. The case here, what you need to know is that instead of just buying 1 or 2 free companies and then hoping they go up, when you just buy an index fund, you basically buy the whole market. So if you are bullish that think like the US market is gonna do overall good, then you just buy the index fund and you set it and forget it. You're less worried about how are gonna be doing the quarterly views of each specific company as well and so on. It's just easy. The second thing I do is that I sometimes buy individual stocks, so that would be like 5% of my monthly investments. And the last one, my third investment bucket, are cryptocurrencies, and that's also between 5 and 10% of my monthly investments. It also depends. These ratios are not set into stone. I have frequently been 100% to index funds. For example, what I am at the moment, I'm not currently investing in new individual stocks or new cryptocurrencies, at least not for the next few months. And you never know, that's gonna change, but still, like, my philosophy is like, okay, these are the 3 buckets I normally invest on. What's important as well, and I also want to keep in mind to you as well, is things that I don't invest on. So I don't short stocks, I don't buy options, I don't buy commodities, I don't buy crowdfunding, I don't do crowd lending, I don't buy real estate investment trusts. There are of course a lot of money to be made in all of them, so not saying that it's bad, but I just think that in the current Danish context it's sometimes not worth prioritizing. And for example, myself, I have a lot of things going on, I just didn't prioritize to learn about too much about options and commodities as well here. I know people that did and made a lot of money. If that's your case, of course, you feel free to do that. But again, you need to do a lot of research before you start playing into these more complex markets. Then there's one fourth bucket, which is the, let's say, less sexy bucket, is the pensions. I guess I said before, you have a pension. Like in my case, my company pays 10% of my salary or 10% of top of my salary as a pension, and then I need to put 5% of my own salary into the pension of my gross salary. I mean, that's mandatory in the company. This makes my pension contributions quite high, but again, I'm not putting more money into this than what I'm, let's say, obliged to do by the contract, because at the end of the day, like, you only get this pension in Denmark when, at least in my generation, when you're 69 or something like that. I think that's more than enough for me to put more than 10-15% of my salary. Again, if I would be in my late 50s or something, I would be putting more money, but again, for most people, I think that's pretty much enough. We need to keep in mind as well, one thing I didn't mention about pensions yet is that if you want to cash out your pension, you will need to pay around 60 to 70% in taxes. Right? Like, the idea is that the taxes are so high that if you want to take out your pension, it's just so bad deal that you should not do it. Next up is how I invest. I have now told you all the rules and regulations. I have been telling you what I am buying. Now I'm going to tell you how I buy it. I buy, as I said, at the earned interest wall in the most frictionless and automatic way as possible. In this way, then I decided to work with free brokers. Free brokers, again, where I set automatic transfers and then everything is handled as much as possible automatically the last day of the month. Specifically, first, I use Nordnet for buying index funds. So Nordnet is good for two main reasons. Nordnet has what's called the monthly sparring system, where they automatically buy for you 4 index funds, or can be 4 individual stocks if that's what you want, or 4 products. They do that for you every single month, the 8th of the month, at least that's what it's now at the moment, and without any fees. So basically, you put in like, okay, how much money you want to invest in a single month, you put the assets that you want to be investing on, and then it's all handled for you automatically. And I made a video where I explained this concept in depth. That's basically the best way to invest for 99% of the people. The second thing I use Nordnet for is that Nordnet reports your taxes directly to SCAT. So they do all the paperwork, all this mess I have been telling you about, these different rules and taxations and ratio of like 53,000 or like all that complex thing is done by Nordnet. You don't need to worry about it. It's actually part of the service that they have for you, is that they do all this for you with SCAT. When I go and then buy my own index funds, I now buy 4 funds. If you want to know the specific funds I buy, you should definitely check my email course, where I actually give you them all this information. It's, again, free email course, no catch. Just go in there and you will see what I'm actually buying myself. But you just want a high level overview. What I'm buying at the moment is an index fund for the Danish specific stocks. I buy an index funds for the whole worldwide market. I buy something more specific to the US market, and then I buy something for the emerging market. So these are 4 funds I'm buying at the moment, mostly leaning, again, most of the portfolio is focused on the US and worldwide stocks, with a bit of exposure to these other 2 smaller markets, as I mentioned, the emerging markets and Denmark. Then specifically in Nordnet, I have, as I said, like 2 accounts. So the first one is the main investment account. That's where I have this money of sparring setup going on. And then the second account is where I have this Active Sparkonto that I was just mentioning before, right? So what I did is that as soon as the Active Sparkonto opened in Nordnet, I maxed that out. So my account, like the limit when I actually had the opportunity to open my Active Sparkonto was a little bit more than 100,000 Danish. I just put in 100,000 there, and then what I did in the Active Sparkonto is that I put and bought the stocks where I think have the highest risk, but at the same time highest reward. Because again, like if I buy, for instance, tech stocks and think that they're gonna do really well in the next few years, I just put that in the Active Sparkonto, because I think like I would end up paying less in taxes because of that strategy, right? So with that, my goal is that if you want to start somewhere with investing, I mean, of course, it's good to watch through all this video and watch all the other videos that I have been sharing and the email course as well and so on. But the simplest thing you can do, and the first thing you should do, is open an Active Sparkonto, and that's where you put, until you max that out, you shouldn't be thinking about anything else. Just max out that Active Sparkonto. That's the only good deal that you can have in Denmark, and it's not, even that good deal, but I mean, comparing to the other alternatives, is pretty good. Just 2 more things on Nordnet. The first one is that if I wouldn't live in Denmark, I wouldn't use Nordnet, and I wouldn't buy the specific funds I have in my account. The reason for this is that Denmark has such a specific set of rules and regulations that you want a broker or a company where you can actually put your money on that really understand and have this interface with the SCAT authorities as well, so you're not getting into trouble. If you want to do like investments in for instance, like at the Giro, or like at the Giro by like the Vanguard funds as well, like you do in almost every other country, that's fine. But again, you might end up into a lot of headaches running the taxes and making sure that you're doing everything according to the law. And again, when you're talking about sometimes big money, big spots of money, you need to follow the law in the best and most correct way possible. And the second thing is that if you don't want to use Nordnet, the best alternative in Denmark, or basically the other only good alternative that they have, is called Saxo. They don't have models of sparring as Nordnet has, but they have lower investing fees. So, and also they do the taxes for you. So overall, as a rule of thumb, what I suggest to people is that if you want to be a very passive investor, you just buy the index funds once a month and you're just good to go. Nordnet is the place to go. If you want to be a bit of a more active investor, where you just want to buy stocks a bit more frequently than just once a month, then Saxo is likely the best place to go, again because of the lower fees. Second, I use Revolut for individual stocks. So Revolut is the closest thing we have in Europe to something like Robinhood in the US, where you have like very low fees or no fees at all to buy and sell stocks, quick trading, good user interface, and so on. Revolut only supports, at the moment I'm recording this video, to buy and sell stocks only, so no advanced financial instruments. It's just a convenient thing, and I just don't buy a lot of stocks. As I said before, I have some Apple, Taiwan Semiconductor, some a little bit of Square, a bit of Palantir, Airbnb, Shopify, some stocks, but again, like this is just a tiny bit of my portfolio. I'm normally, as I said, like I buy and I don't sell. In the best cases, you should do this directly in Nordnet, but the fees are so high that it's just ridiculous. So for most people, I would just recommend you that you don't even worry about this at all. Don't buy individual stocks and just do everything with your index funds. But again, if you want to really believe that a specific company will gonna do great and you want to buy that specific company, you can use Revolut. Of course, you can use Nordnet, you can use Saxo. There are many other platforms you can do this. Revolut, unfortunately, doesn't have the opportunity to have this direct interface with SCAT. Again, if you're doing it so little as I do now, you can actually send that information yourself to SCAT when you do your own taxes. Number 3 is that I use Coinbase for cryptocurrencies. Coinbase is the most user-friendly place to buy and sell Bitcoin and other cryptocurrencies, and if not the most trusted, it's like one of the most trusted for sure. The flip side is that Coinbase has also relatively high fees to buy and sell crypto. What I like about Coinbase myself is that when it comes to buying and selling Bitcoin and things like that, you can also do models of sparring analog, where you can actually set up an automatic recurring buy. You can do that every like 2 weeks, every month, whatever you prefer is your nice cadence. And you just put, okay, buy Ethereum, buy Bitcoin once a month, and just get all done automatically. You just send your money automatically from your bank account to Coinbase, and then that's get done automatically. There are no other really good crypto exchanges that do this in a way that Coinbase does it. High fees, but you had the opportunity to just set it and forget it. So myself, I only buy Bitcoin and Ethereum. I have some other crypto. I made a video where I explain my crypto investing over here in case that's what you're interested, but what you just need to know as well is that like set it and forget it. And my thoughts on Bitcoin is that I am still a believer that even now that it's still pretty high, might not be as high as it was at the end of 2021, but still Bitcoin is pretty high. It's one of the best, if not the best, asymmetrical bet that you can make at the moment. It could be there's a 90% chance that Bitcoin and all the cryptos go to zero and you lose all your money, but there's still a 10% or so chance that you might 10x, 20x your investment, and this could become something really big. So I'm still thinking that, okay, that's something worth putting like 5% of my investment money on. So if that's your case as well and you want to take a little risk, you can of course do this. But again, don't put money into crypto and you're not willing to lose. If you just have a little money, just put into the safest index funds and just get done with it. Related to Coinbase is that there's another website, another platform called BlockFi, which I started using last year and I also think it's pretty good, where you can actually deposit the crypto analog to the US dollar, which is for instance a USDC, which is called a stable coin. Not to complicate too much, a stable coin is a cryptocurrency that is pegged to the US dollar and basically it's always the same as a US dollar, but it's in the crypto world you could call it. If you deposit USDC in, so I mean this USD stablecoin in BlockFi, you get 8% in interest per year or more. I started investing and now from a lot of time, that's actually the interest that you get. This is a legit service by big players. A lot of smart people I know put their money into BlockFi, and I have not a substantial amount of money, but I have just some money in BlockFi that I think like, okay, I have some spare cash instead of having it in my own bank where I actually need to pay negative interest to the bank. I have places like BlockFi where actually I get paid myself 8% interest. Just keep in mind as well that when it comes to BlockFi money, all this interest on crypto, that will also be taxed as crypto gains, so again on top of your salary. And that's kind of the overall picture. Just I want to give now a few more thoughts before we move on. And the first one is that I only invest this much and I put all this focus on investing because I already own my apartment. So I have already paid the 20% down payment for my apartment. The rest of the mortgage is interest only and it's very cheap to service, so post taxes and so on, it's like around 1.5% including all the fees. This artificially low cost gives me the opportunity to save a lot more than it's the norm, and then because of that invest. I only started investing investing like seriously like this 7 years ago, or so ago. I had an irregular career until then, and I didn't have much of a decent savings rate only until a few years ago. The guess here and the bottom line is that it's never really too late. It's not that you need to start investing when you're 21 to actually, be great. Of course, the older you get to when you want to start, and the more you will need to catch up, but it's definitely not something that will be out of the picture for you. And then one thing as well, which I think it's key and a lot of people overlook, is that if you have limited resources and you're not earning super much money as well yourself, perhaps instead of putting all your spare cash on index funds, the best thing you could do is to invest on yourself. Because after all, when it comes to assets like index funds as well as on, like the biggest asset is yourself. The best returns on investment will be on developing yourself, developing your skills, developing your career. And that means like learning and development, taking coaching, building a network, getting a specific certifications where that makes sense. I can't stress it enough, like investing in yourself is like the best investment you can ever do. Especially again, like if you are not being highly paid or anything, like you can supercharge your returns a lot more than just buying an index fund or just buying a crypto and hoping it goes to the moon. And again, this video is super long already. I just don't want to bore you anymore, but if you want to deep dive on further on this and you want me in a more structured way going through this in different lessons, there's again link down to the courses on the video description. All the points I make on this course are going in depth into that course. And now to end, I just want to give you some highlights from my favorite books, which I think are also very relevant when it comes to especially new investors. First one is from Nassim Taleb, where he says that when you invest, note the central asymmetry in life, and that is that in the strategy that entails ruin, benefits never offset the rules of ruin, which means that don't be greedy and play the long term. And the second quote is from Scott Adams, where he says that if you think you're sharp, just keep in mind that most people think they have a perfectly good bullshit detector, but if that would be the case, trial by jury would always be anonymous. We'll all have the same religious beliefs, and of course we don't, and that means that we see the world in different ways. That's a handful, folks. If you want to hear me talking even more about investing in Denmark, check this video over here, where I shared the best approach I think for most people in 2022. Thanks for watching, and I'll talk to you again next week.